Mo ti lọ́ọ̀gì gbọ́n most ìwádìí mo ní ẹ̀ṣọ́ rẹ̀ bẹ́ẹ̀ ni báyìí most. No, I don't.
You have 1 minute remaining. Down 6 hash to book.
Good evening, Prof. Good evening, sir. Hello, Prof. Kindly unmute your audio, please. Click on join audio. We can't hear you here, sir. Hello, Prof. Can you hear me? We can't hear you. You have not joined the audio. You have not joined audio. Hello, sir. You have not unmuted yourself, sir. You have to unmute yourself and join the audio, sir.
I'm seeing you now.
Okay, I can hear you now.
Okay, I'm with you.
But I can't see your screen, sir. You have not shared your screen.
How will I share my screen?
Click on share screen and choose your material. Hello, sir.
Hello.
Can you hear me, sir?
I'm hearing you.
Go back. Go back. It's not. You are not. Go back.
Okay, I should go back.
Just cancel it. Cancel it. Close the page. Close that
Okay.
page.
Okay.
Now click on share screen. Have you opened your material, sir? Hello, sir. Hello. See your screen now, sir. You can see your screen now. Hello, your screen is live now, sir. You can start the lecture. Hello, can you hear me, sir? Hello, sir. Hello, sir. Hello. Hello, sir. Can you hear me?
What is the issue?
Hello, can you hear me now, sir?
Mhm.
Yeah, hello, sir.
Hello, sir.
Yeah, I
Hello.
can hear. Hello.
Oh, I can hear you now.
Yeah, you can go ahead with later. I can see you and see your screen.
Okay. Mm.
Shut them alone.
Come and put this thing down. The cutting.
Hello, sir. Hello. Hello, sir. Hello. Hello, sir. Hello.
Ẹ kàn sọ bẹ́ẹ̀ ni wọ́n ní kó fẹ́ olóhùn ti lo zoom tẹ́lẹ̀.
Take good care of her. I don't think I'll be able to handle it. If someone makes her cry. I see nothing in front of those people, but I'll say something to you now. You threw your relatives out of this house, all because of that
Hello? 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 Hello, can you hear me? Hello? Hello, class? Hello, can you hear me? I'm using another device. Okay, let me continue. Sorry about the echo. I'll try to connect with another device now. What I will do is that okay. Just hold on, let me confirm. So what I will do is that I will use the screen. I'll use the screen of the system to discuss. So sorry about the delay. Now, today we are talking about rules of professional conduct. And what it means is that as professional accountant, you are expected to demonstrate certain behavior in the course of your career or engagement, audit engagement. These behavior are what's supposed to guide you, to tell you how far or how well you are going to go in the accounting and auditing profession. Now, just like we have in the medical doctors, the lawyers, and all other professions, they have their own rule of professional conduct. The one that guides the accounting profession are enshrined in the ICANN Members Code of Conduct. ICANN Members Code of Conduct. So in ICANN Members Code of Conduct, there are 5 germane principles. Now, some of you will be amazed to see that what you have here, some of you might say, is this incorrect? Now, what you need to understand is that ICANN is affiliated to other international accountancy bodies, one of which is the International Federation of Accountants, IFAC. And IFAC is the mother end or the overall of accountancy bodies in the world. So in their own organization, they have certain organs in their organization. One of it is the International Audit and Assurance Standard Board. Another one is International Ethics and Standard Board for Accountants. Now, international, let me just quickly tell us what I'm trying to say. Now, International Audit and Assurance Standard Board is responsible for the issuance of standards, while the International Ethics and Standard Board for Accountants is responsible for issuing out principles, code of ethics that guides the profession. Now, when they issue their own, the one that they issued are the ones that we will always be known to use. So some of the 5 ones are, the first one, you have objectivity, you have integrity, you have professional competence, you have the next one, you have the professional behavior. So these are some of the things that you have in their own. Their own does not contain independence, and their own does not contain conflict of interest. But in the ICANN Members Code of Ethics, these principles that you have listed here are the ones that are contained in the ICANN study pack, the new pack. So these are the ones that we are going to look at. Now, independence is very key to auditing practice. Now, if you are in public practice, you should be able to be self-sustaining or self-sufficient on your own. That you don't need to depend on somebody to decide on the fate of your client. So independence has to do with having a mind of your own that cannot be influenced by any external body or person. Whatever you say is what you stand. You should not be afraid or wary of somebody that is, when you say something, the person will come after you, will charge you for litigation. That is what independence is talking about. You can see that when you look at the audit report, they always say that it's an independent audit report. It's not influenced, that report is not influenced by anybody, even the management of the client that engaged the auditor. So independence is very into two. You have independence of mind and independence in appearance. Now, independence in mind is what I just explained. Independence in appearance has to do with having a premonition that your practice, whatever you say, whatever you do, should tally with whatever you say. That is, you should always walk the talk. You should not be saying something else and you are doing something otherwise. And some of the instances we can give here, first of all, look at it in this way. You are the auditor of a client A, and client A that you are auditing, you are also taking up executive position in that same client's company. That will not be allowed, because you might say that you are independent, that you will not be influenced by anything, but the public will not see you as independent, because it shows that your decision, you will not be objective in taking decisions. That's what it means. You will not be objective in taking decisions. So what it means is that whatever you say should match whatever you do. That is independence in appearance. Your mind, your way, your approach should work, should be in tandem. That is what independence in appearance is talking about. Now, objectivity is the next one. Objectivity has to do with having a clear mind, having a fair sense of judgment. Whatever you say, you should be able to defend it. And when you are taking that decision, that decision should not be clouded by any prejudice. So you say something now, you should be able to stand by it and say that, yes, what I said, yes, I stand by it, and these are my audit evidence. These are my audit documentation. So like I always say, tell my students, objectivity has a lot to do with auditing. You should not attach any sentiment to the audit that you are doing. You shouldn't be emotionally attached to it. Do your work in a professional way and get the job done. That is what it's supposed to be. So let me take us back to the incident that happened sometime last year, when a senator-elect maltreated or abused a sales girl in a sex toy shop, Elisha Abo. Remember that when the senator was summoned into the Senate committee to hear his view on what happened, to express himself, the chair of that committee was headed by Oluremi Tinubu. You could see that when she started, she became emotional about the whole matter. So she took the matter on herself. And that was why she was asked to leave that committee, because whatever she's going to say is going to have an influence on whatever decision the committee is going to make at the end of the day. So even as a judge, when somebody has wronged you before and they brought a case before you, don't attach your sentiment to that decision, to that judgment you are supposed to take. Take it as professional as possible. That is what objectivity is talking about. The next one is integrity. Integrity has to do with being straightforward. A man of integrity is someone that can stand by his word any day, anytime. He does not fear if he's being disturbed or if he's being threatened or whatsoever. He stands by what he says till the end of time. That's what they mean by being integrity. Not everybody have integrity. So for you to be an auditor or to be an accountant, you must demonstrate high level of integrity. So what that means is that when they are doing anything shady, you should not be found involved in it. When they are giving you document that you come and sign, if you have not reviewed the document, you don't append your signature. So these are some of the things that will be exemplified when you say you have integrity. Then the next one that we are looking at is conflict of interest. Now, conflict of interest is coming here because it has a lot to do with the practice of auditing. Now, when you look at conflict of interest, you are looking at it from two angles. You are looking at it from the side of the auditor himself. When the auditor is taking up an engagement. For instance, let me give you an instance. When you have an auditor that asks for seek opinion from another auditor. For instance, they want to procure a software, and you now say that, okay, my dear auditor or my dear colleague, can you recommend any software for me that I can buy an original software? And the person now said, okay, go ahead, go to this person. At the end of the day, that auditor that recommended you to that person will now go to that vendor and tell the vendor, please, what the number of people that I recommend to you, I am entitled to a commission. That is what is conflict of interest. Because what you are doing is that it is against the practice of accounting or auditing in Nigeria. It is not supposed to be so. If you are rendering a service, you are doing a favor to somebody, do it and don't attach any financial benefit to it. Because the way it is that when you do such, it shows that you have a self-interest threat. We'll still talk about that. You have a self-interest threat because there is economic gain attached to it. The other side of conflict of interest has to do with when you are standing as opposing party for two companies in the same competitive business. For instance, you are the auditor of Coca-Cola, you are the same auditor of Biggie Cola. Now, what it means is that between the both clients that you have, they are competitors to each other. So what it means is that as competitors, there will be some trade secret that you have, there will be some information that you have about both of them. And it is very likely that when you deal with such clients, there is every tendency that you might divulge information of the other competitor to the other party, which is not supposed to be so. So that is what they talk about. That's why they talk about conflict of interest between competing firms. So you shouldn't, when competing firms. So what they're saying is that you shouldn't, when you find yourself in a situation whereby you are the auditor for two competitors or two competing firms, two competing companies, you should try and ensure that you let them know. For instance, you tell them you are the auditor of 7up now, Biggie Cola, tell them that, sorry, I'm also the auditor of 7up, so that they know. And 7up, you say that, oh, I'm the auditor of Biggie Cola, so that they know. Because so that they can know, you can tell them, so these are the safeguards you have taken to edge against this threat. We'll still talk about threat and safeguards. So I'm just giving us heads up. Now, the next one is confidentiality. Confidentiality has to do with ability to retain information and not divulge it to third parties or public. Regardless, even if you have colleagues, you have colleagues in the same auditing profession, whether you are having a get-together, you are having a social gathering, that should not give you the opportunity to start discussing about your clients. It shouldn't arise. But what has happened is that with the rule of professional conduct, there's an exception to this confidentiality. Confidentiality means that ability to withhold information and not divulge it to third party. That's what confidentiality means. But there are instances where this confidentiality can be waived. There are instances where the confidentiality can be waived. Confidentiality will be waived in this instance. One, if it's required by law. If it's required by law, you cannot deny saying that you don't want to share those information with your client information with the public. For instance, if your client has been engaged in money laundering activities now, and you have been called that as a witness to come and explain what you know about your client, when you have such instance, it means that you should, at that point, because it's the court that demands that information. So you don't need a consent from your client before you give such information. You should be ready to give such information right there and then. Other instances where you can give that is also when there is a need for it. When there is a need for it, whether there is the law requires it, or whether you are standing as a witness. All these instances, you have to divulge, you have to break that confidentiality clause. Now, what you also need to understand is that confidentiality has also taken another dimension, starting from the moment when you have the nuclear, that is law against laws and non-disclosure of laws and regulation, meaning that what it means is that what that law means, nuclear, what it means is that at any point in time, you should be able to divulge information of your client when the need arises. For instance, if you have a client that is into money laundering activities, what it means is that you should, even at the slightest suspicion, you shouldn't even wait. At the slightest suspicion, you can report that client to the EFCC or whoever the authorities are. Report to them, even if the suspicion was wrong. The law we protect the auditor, or we protect the audit firm from being subjected to litigation, because what it says is that any act of money laundering should be what? Should be reported. Whether it's suspicion, you should report it. Also, you also need to understand that under confidentiality, there are instances where you don't need to divulge information, that you have to get the consent of your client. For instance, when somebody asks whether you are in a place, and they now say that, oh, I need information about your client bank statement. For instance, when your client wants to take a loan, they will ask the auditor, okay, who is the auditor? Who is the auditing firm of this client? The auditing firm will now come and say, okay, who is going to stand in for the client? You now say that, oh, can you give us information about your client as per whether it is liquid enough or whether his business is doing very fine? In that instance, you might need to get the consent of the client management before you decide to do what? Before you decide to release such information. But anything that has to do with criminal tendency or criminal nature, the law is backing you up to relay or divulge such information, which is contrary to what you have in the confidentiality clause. I remember I say it again, confidentiality has to do with what? The ability to withhold information and not to share information to third parties. Secret information with third parties, that is what we are looking at. Now, these 5 principles that we have looked at, there are certain things that can that challenges the performance or the execution of these principles, and these challenges are what we know as what? Threats. Threats are what prevents or prohibits or stops us from exhibiting these 5 principles that I've just enunciated. Now, we have 5 threats. The first one is self-interest threat. Self-interest threat here means that this is a threat in the sense that you now start to show empathy for your client, or you could be in a situation whereby you now see your client, because of the monetary gain you are getting from your client, you now say that, oh, you want to do everything to protect such client. For instance, when you have a client that is contributing about 25% of your annual turnover as an audit firm, it contributes 25% of your annual turnover as an audit firm. Such clients, you know that you hold that such clients with care. You will not want to lose such time, because apart from rendering auditing services, you're also rendering other services like taxation, like valuation, like other things. You are doing so many things for that client. So in the process, you are getting more from that client. So if some other client that you are not earning so much, when they call for your attention, there's a tendency that you might not give them the same attention as you are giving to that client. Another instance of self-interest threat will arise when you have been close to that your client for a long time. So when they tell you that your audit fee will not be paid this time around, that because your money has not been paid, they will now tell you that from the next accounting period of the next financial year, you still be the one that will audit us. Now, what that one means is that at that point, when you are the one auditing them, it shows that you have become part and parcel of them. And again, because of the economic gain you are getting from them, you will not be able to say no. You say that, okay, because they've been paying me before now, so let me empathize with them in this trying period so that I don't lose such clients. So those are some of the examples that will be portrayed under self-interest threat. The self-review threat. The self-review threat is a situation whereby you have audited the financial statements, you have done everything. Now, it now happens that somebody or sometime along the line, somebody now says that, oh, what you have done, come and somebody else will now pick it up. Maybe it's a member of that engagement team that audited the financial will now pick it up and say they want to review again. So there is that fear that will come to your mind or come across your mind saying that, oh, what if I have not done a thorough job? So what if I've missed something out in the course of performance of this audit engagement? All these questions will pop up in your mind. So what it means is that you should the tendency that somebody is going to look at what you have done and with the hope that with the hope of finding a mistake in what you have done, we tend to pose a threat to the auditor himself, because you don't know what angle or which area you are coming from. So you will be what? Very, very threatened or afraid. For instance, you have an auditor that has audited the financial statement, and now after that auditing financial statement, they now told him that, okay, what you do, you now decide to, okay, you now take a position, a certain position in that client business. You understand? So when you take position in that client business, your fear will be that if you have not done a thorough job in that audit that you had done before, it's going to have a negative effect on what you are going to do subsequently, because you don't know where they are coming from. The best thing for such instances is that if you are to take any position in your client business, what you need to do, you need to resign your appointment as the auditor from the firm entirely. Resign your appointment from the firm entirely and take up a new position. Nobody is going to get cross with you if you do that. When it's a situation whereby you are still holding that position of auditor, or you are still working in the audit firm, and you are also part of the engagement team that audited that client the same period, and you now decide to take up executive position in that same client, that will not be appropriate as a professional accountant. The next one that we are going to talk about is the advocacy threat. Now, what that one means is that auditors should not stand for two opposing clients when there is a litigation. So, for instance, if you have two clients, client A and client B. Now, presently you are with client B, you are no longer with client A. Now, when client A gets involved, maybe at a point in time, their businesses cross paths. That is client A and client B, their businesses cross paths. And as a result, somebody suffered the damage. Now, because you have worked with both parties, does not give you the room to now say that, no, I know how to handle the matter. I can settle this matter amicably. Unless you have been appointed as a mediator or as an intermediary by the competent court of jurisdiction, you cannot oversee or you cannot legislate or you cannot interfere in such matter. So that is what advocacy threat is talking about. Then the next one is familiarity or trust threat. What this one means, they say familiarity breeds concept. What this one means is that when you are too familiar with somebody, there is a sense that so many things you overlook. There was a case that just popped up during this COVID-19 around May, June. It's called Wirecard. Wirecard is a company, is a credit or is a financial institution that issues credit cards to their clients. The company is based in Germany. Now, what happened is that their auditor, Ernst & Young, have not, for the past 2 years, they have not been checking the books of this company. Why is it so? Because they've become too familiar with the clients. So they believe that everything is fine. So when the company ran bankrupt or started having financial issues during that period, around May, June, they had to investigate what actually happened. That's why the auditor that has been auditing that client has not been diligent in the performance of his audit engagement for the past 2 years. He has not been looking thoroughly at the books of accounts. So that is what familiarity brings. Familiarity too also makes it possible that when you have been auditing that business for a while, there are some, you become complacent. You don't want to have a situation whereby you now say that, oh, let me check what I'm doing, whether what they are doing is right. You just believe that because all is correct, they've done it correctly for the past 5 years. Who tells you or who told you that what they've done this year will be correct? So there is need for you to continue to have that constant mindset of that, which is called professional skepticism. What if something is not right? Professional skepticism. What if something is not right? So if you have that mind that what if something is not right, it will make you, push you, it will drive you to wanting to do more, so that you don't decision whereby you have some tables that you have not turned in the course of performance of the audit. So that is familiarity trait. So one thing you also need to talk about that familiarity trait is that one way you can look at it is that another instance, when you become too familiar with somebody, for instance, if as the auditor, your wife or your relative, because he needs a job, you now decide to, okay, I have a client that I work that, one of my clients, let me give that client, let me introduce you to that client so that he can secure a job. Now, there's nothing bad in that, provided you can declare, you can disclose it. You can disclose it, there's no issue. But where you cannot disclose it, then it becomes an issue. Another instance you can look at under familiarity trait is that you are auditing your client, which is a financial institution, a bank. Now, we all know that the commercial rate for loan is around 27, 28, 30% thereabout. Now, because you are the auditor, not say that as the auditor, no, come and pay 5% or come and pay 10%. In as much as that transaction is not going on in the commercial way, at least at arm's length transaction, that is, there is no connection, nobody is influencing what, that could be termed as what, familiarity trait, because it shows that you will not be able to do justice to what you are supposed to do. That is what it means. So that is another thing under familiarity trait. The next one we also want to look at is the one that has to do with intimidation trait. Intimidation trait. Now, under intimidation trait, what that one means is that it's a situation whereby you are not allowed to express your opinion because of fear of the unknown. Maybe your client is the one saying that if you give any wrong information or you give us a qualified report, we are going to sue you, or we are going to end the contract that we have together. All these instances could be termed as what? Intimidation. There shouldn't be at any point in time where the auditor is intimidated by the client, no matter the circumstance. He should be able to do his job thoroughly without any fear or favor. If he sees what is wrong, let's say there's a fraud that has been committed in that company, he should be ready and able to disclose and say that this is what I have seen. This is what I have seen. This is what is happening. You should not be afraid to say that there's a fraud here. But where such auditor cannot freely express his opinion about what he has done, then what happens is that the auditor has become intimidated, which is another trait that is affecting the performance of auditor to express those 5 major principles. I hope there is no question so far. Hello, class. Someone should just say yes. If there is any question, please let me know so that I can go back before I proceed. Okay, So let's continue. So the next one we are looking at is safeguard. How do you guide against this threat from crystallizing? So we are looking at it from 3 angles. So anything that you do, because you cannot completely eliminate this threat. The threat will always be there, but you can reduce it to the barest minimum. So what are the things you can do? And these things are divided into 3 main parts. The first one is safeguard created by the profession, legislation, and regulation. What it means is that there are certain laws that have been enacted in the Members Code of Conduct that when you have any of these things happening, you are free to express yourself. You can report such clients to the body, that is ICANN. You can report such client to the body so that they can take it up from there. There are certain legislation to that prohibit clients from intimidating their clients. So all this information are contained in the Members Code of Conduct. So for instance, as an auditor, once you are being intimidated, you can abandon the job or you can resign. The law gives you that right. Once you're able to have a dialogue with the management and the management does not see any reason in whatever you are saying, you don't want to come to terms with what you are saying, then they can decide to resign your appointment as the auditor. Whether you do it in a proper way, I think you have to submit it to the head office, the registered office, and tell them that you are no longer there and give reasons for your resignation. You have to give that reason. If you have a genuine reason, you have to state it. So whether you can do that, you are protected. Another one is safeguard within the work environment. Safeguard within the work environment. So that one means is that there are certain principles, policies, procedures that exist in the audit firm. For instance, where you have like my first lecturer explained yesterday. For instance, where you have a client and that client you didn't know because you didn't carry out due diligence, but is into money laundering. What it means is that at that point in time, the law, every firm has a policy on how to report money laundering. So you have to report it to the money laundering officer. So you report it. Once you report it to the officer, that officer will be the one that will take it up. So that is an instance. For instance, where you see that you are going for an audit and you know that, because before you go for an audit, you always have a briefing, all the engagement team. You know, yes, somebody asked a question about the engagement team. So engagement team is a team that's set up to carry out an audit engagement. So it's always headed by an engagement partner. So when you have an engagement partner and the engagement partner, you now say that, okay, you are going for so and so place. They give you all the lowdown of all the information you need for that audit you are going to. Now, as a member of that engagement team, if any information comes across your mind and say that, maybe that place you are going to, you have a relative there, or you are related to that person there, right there and there, you need to escalate and say that, no, please, excuse me from this thing. I cannot be part of this thing because there is a relationship. There is a relationship between myself and the client that we are going to audit. That is better because audit firms have laid down procedures for ethical issues, how to resolve it. How to resolve it is always stated there. So you should be able to report it. It's better you report it right there and then before you set out. That when they now start the audit, somebody will now point it out. Or when you see the person, there is a way when you see somebody that you are related to, the way you treat that person, the respect you give, you accord that person will be different. So will not ask. So then there's a relation between you and this person. Because such relationship can bring about issues or bring about you not being fair in what you are doing, because you say that I don't want my relative business to be questioned or the report to be qualified. I have to ensure that I do everything that needed to be done so that the report will not be qualified. So each audit firm have their policies and procedures, And I want to believe that yesterday, my other facilitator started with quality control. That is practice management. He's going to talk more about it. So we are going to look at all those policies, procedures, systems that exist in audit firm. The next, that will be on next time. So that is what, those are some of the things that exist in the work environment. Then safeguard created by the auditor, individual auditor. Now what this one means is that as an auditor yourself, there are certain things you need to set standard for yourself. For instance, you need to say that, oh, when I'm doing a job, I need to exercise due care, skill, and diligence. That is, whether somebody is looking at, whether somebody is watching, whether somebody is supervising me or not, I should be able to do a thorough job. Then I should also be able to update myself with information. You don't go to audits when you don't have updated information, because information you have yesterday might have become stale today. So ensure that you update your knowledge, so that if somebody is giving you any you are in the course of your engagement, you will be at your best performance. You'll be at your peak when you are carrying out your engagement. So these are the safeguards that are in existence to tackle those threats that we have highlighted before. Now, when there is an issue again with the, when there's an issue with the between the client and the auditor or the audit firm, there are ways in which you can resolve it. For instance, if a client says that I'm not happy with what you have done, the best thing they can do is to initiate a conflict resolution process. Now, so first of all report, you can gather, start from the scratch. Okay, who are report? You can report to the managing partner. Now, managing partners are the ones that sit at the helm of affairs of audit firms. They are more like the MDs. They are more like the chief executive officers. So you can have a discussion and say, this is your new partner that came to audit. I'm not happy with his performance or level of performance. You can have that discussion from there. So if you are not able to resolve at that level, then you take it up to the institute. So when you take it up to the institute, these are the issues that you need to state. First of all, you need to talk about the fact. What are the core issues that you are discussing? The second issue you have to do, what are the principles that have been breached? Is this independence? Is this objectivity? Is this integrity? You have to state it. You have to look at what are the laid down rules. The ICANN body, the tribunal, will ask you, as your audit firm, do you have any laid down rules in which you settle conflict when it arises in an engagement? They will ask you that. So, and most audit firms, they have all these policies in place, conflict resolution policies, how they resolve issues. For instance, when you are auditing a client and after you have audited, you know, especially for listed companies, you are expected to submit that report to second opinion. By second opinion, it means that your final decision is not truly the final decision. Somebody needs to review that your decision, because once you release that report out, you cannot recall it. Somebody will need to check what you have done to see that yes, you have done a thorough job. So that person that will do that is known as engagement quality control reviewer. So you will check what you have done. How you arrive at those conclusions, your opinion, you discuss with him. You look at your audit working papers. These are the document information that you gather in the course of the engagement. You submit everything to him. Your working paper, your working file, you submit it to him. You will review it from beginning to the end. He will sit you down, discuss what are your challenges, all those things you encounter in the course of it, you will discuss with him. How you arrive at your opinion, you discuss with him. All this information you provide, all this information you provide to him, and from there you will know whether you have done a thorough job or not. So these are ways in which you resolve it. Now, another thing we also need to talk about under that chapter 3 is corporate financial advice. What this one is saying, I will not waste much time because we have to try and take a question before we go today. Now, what this one is talking about is that when you are auditing a client, you should not be in the best position to advise the client or to give financial advice to the same client because you cannot see beyond. There are some things that will be cloud your sense of judgment. So it is better you tell them, let them know that no, I can, when I'm reviewing your financial statements, don't come and ask me for advice on prospectus reporting, or you want to get listed on the stock exchange. That information should not come from you. You can tell them, advise them, oh, please, you can go to so and so this firm to help you with such information. Because when you are the same monitor that is auditing a company and you are the same monitor that's giving them financial advice, then that means that you might not be able to be fair in your decisions that you take. That is what corporate financial advice is talking about. So, for instance, a client wants to get listed in stock exchange and now come to you and say that you are the auditor now, come and help us to advertise our shares. You understand? You shouldn't engage in such practice because one, you are part and parcel of the system. What that one means is that you are in the same, you are the one that audited the job that they have done. So you shouldn't be part and parcel of that system. So best thing you tell them that, oh, sorry, get a second opinion from so and so audit firm. They are in the best position to give you such advice. So that is because it's an abridged version of the entire topic. But if you have any question on this, you can put all your comments. You can put your comment here. And if you're not able to put your comment here, maybe later you've read it and you have some concerns, please, you can put it up at the platform, like the FCAA refresher course platform. Put it there. I'll be ready and available to attend to all your questions. Now, let's take a question. We'll not be able to complete it, but let's just see what he's talking about. The question goes thus. They say a group of small practitioners realize that they are not taking advantage of the opportunities provided by the Institute's mandatory continuing professional education for members' professional development. At a recent seminar which they attended, while waiting for the commencement of the program, one of them overheard a discussion by some other professional colleagues about the difficulty they encounter because of the restriction on the types of non-audit services that can be offered to the audit clients. The group of small practitioners became curious and wanted to know more. Your partner, who was also listening, interjected that one of the seniors in his firm could help improve the knowledge on the topic. You are therefore given the responsibility to prepare a presentation to the sole practitioner, focusing on ways to improve auditors' independence generally. Now, let me give us a quick tidbit on how to answer ICANN questions, especially the questions that has to do with advanced audit and assurance. Now, when you are giving your question, please, when they have not asked you to open a question, please don't open that question because you could be penalized. That's the first one. Now, when you have now been given a question, now tell you, okay, go ahead and start. What you need to do, first thing you need to do is that look at the question, scan through it all at a go. Look at it, question 1 to 6. Which one can you conveniently answer? The ones you can conveniently answer, allocate a time to it. Oh, question 6, I can tackle question 6 within 20 minutes. Use 20 minutes and do just to question 6. I can tackle question 2. Put 30 minutes and tackle question 2. So at the end of the day, the ones that you know that is going to, especially that question number 1, which is always compulsory, you cannot run away from, because if you don't answer it, if you answer all the other sections correctly, you'll be penalized for not attempting that question, because they say understanding the instruction is also part of the examination. They always tell you, ICANN exam, other exams, they tell you, attempt all questions. They didn't tell you to answer, attempt. You must have a fair idea of all the questions that you are, the required number of questions you are supposed to answer. So they will tell you, attempt all questions. So question 1, at no point in time, if you don't know anything about it, just try and scribble something down. Because if you have answered the section B correctly and you score like 60%, you saw 100% on that one, because you don't answer that question one, you'll be penalized. In fact, it can score you 49. It can prevent you from crossing over or become qualified as an accountant. So please, when you get your examination, that's some of the reasons why some people are still battling with some of these papers, because they see that question one was difficult, so I don't know anything about it. You just have, don't abandon. Look through it. Something will pop up in your mind, even if it's just 5 lines. That 5 lines, just try it so that, yes, you have some knowledge. So that at the end of the day, when the examiner is marking, they know that, oh, this person, maybe because of time, he could not attend. They will know that, yes, they'll put all those into consideration. So that is what I have to say about that. So let's go back to the requirement of the question. Another thing again, when you have a case study, please endeavor, question one, endeavor not to read the requirement before the question. Why? Because if you read the requirement before the question, you will have narrowed your mind. Because what you are saying is that as you are reading, you're looking out for those answers that jumps at you because you have reviewed, you have read the requirement before the passage. And there are times what you have read, if you have not read the passage before the requirement, some information will have been lost. So to avoid that, I will always encourage my students that please read the case study at least twice. Understand before you go to the requirement. So when you're reading it for the 3rd time again, you can now be highlighting those ones that relate to the requirement. I'm very sure if you use this approach in your ICANN examination and even replicate it in other papers that you are writing or you're going to write, success is guaranteed. I can assure you, testimony will follow. So let's look at the requirements now. Discuss the current position on the independence of the auditor and the basis for the position. Now, when you ask me this kind of question, what you need to do is, you know that this question centers around chapter 3, which is a rule of professional conduct, and you're talking about independence. Try and explain to them what you know, your understanding of independence. Now, what I'm trying to say is that when you are asking this question, explain independence to the best of your ability. And when you're explaining it, please always ensure that you put it in two perspectives. That is independence of mind and independence in appearance. You start from that. You start from that. So by the time you have done that, you will have been able to do justice to the question. Now, let's go, because of time, let's go to the suggested solution. So look at what they've said. So look at it. They said an auditor must be independent and must be seen to be independent. Where the auditor is perceived to lack independence, this is greatly reduced credibility of the report of financial statement audited. The current position now is that an auditor of a company must not perform non-audit services. Now, if you go back to that question, let's go to the requirements 2. That is AII. Discuss the services that may impair the independence of an auditor if provided to the same audit client. Now, what you need to understand is that when you are auditing your client, auditing, audit firms are divided into 2. You have the Big 4 and you have the small and medium audit practices. Now, the Big 4, I will say, they are more experienced in this matter. Why? Most of them have different segments, different departments that handle separate independent functions. So what am I trying to say? If you are in a Big 4, you might be in the energy sector, that is, you only audit oil and gas company. That's what you'll be doing for the next 5 years. You might not be able to do any other thing because that is your department. And there are some, what they are reviewing is the internal control system of their client. That is their department. So when they are going for audit, they will select one from each department and go. So what it means is that the small and medium audit practices, they always have this challenge because one, they don't have the financial muscle. So most of them, they just have limited staff. So the same staff that will carry out the audit that will now be the one that will still carry out other non-audit services. Now, all these services, what they mean by that is that it has to do with other services that you render. For instance, if you help them to recruit in terms of recruitment, for instance, you help them to do valuation of some of their assets. For instance, you help them to carry out the test of internal control system, whether their internal control system is weak or strong. You help them to carry out taxation, whether you carry out, help them to prepare their tax computation and all those stuff. Now, for the big four, they might not have more challenge, but I want to believe that looking at this question, they say group of small practitioners, so it's related to the small and medium audit practitioners. So by law, auditors that are taking up reviewing the audited financial statement of their client are not expected to take up any other job, non-audit services from the same client, because of what? It might impair independence. It might impair independence. Remember when I look at independence, when I said under self-interest rate, when I said that when you have a client that 25% of your annual turnover, you are getting it from one particular client. Come on, you see that when that client sneezes like this, you catch cold. If it needs your attention before you know it, bam, you are there to service your client at his beck and call. You are always there. So, but now, one thing you need to understand is that if you're answering this question, you need to look at what are those non-audit services that we are looking at. So the law says that now they are referring to Sarbanes-Oxley Act because this is one law that has come to stay. It is a law that has been enacted. I think yesterday when you are discussing corporate governance, it's also there. That is one law that has come to stay, that has helped to shape the corporate world as it were now, as what you have now. So he says that these are the services, not the services that can impair auditors' independence. One, you are the one preparing the books, bookkeeping, and other services relating to accounting records and financial statements for your clients. That is one. Two, financial information system design and implementation. You are the one that help them to design their information system and you help them to implement it. The next one is appraising or valuation services. You help them to value their assets. You understand? You perform actuarial services. That is, you help them to do some computation as to their claims, losses, and all what have you. Their pension benefits, the defined benefit plan, you help them to review it. All these and more. You help them to carry out outsource internal audit services to your clients. All these services are what we regarded as what? Non-audit services. Non-audit services. Now, one way, because let's go back to the question requirement, it says, discuss the services that may impair the independence of an auditor if provided to the same audit client. These are the services you have answered that one correctly. Now, evaluate the advantages and the disadvantages of a firm's provision of non-audit services to an audit client. So look at what are the advantages and disadvantages. Now, one of the advantages that you get when you render such services is that, remember, like I always say, audit is an all-encompassing subject. In chapter 2, when you are looking at the regulatory environment, there's something that I remember you talked about, or maybe you have come across before, lowballing. That is when an audit firm quotes a sum, a fee that is way lower than other audit firms that have bid for the same audit job. For instance, you have audit firm A, B, C, D. Now, all ABC have quoted, let's say, 5 million or 10 million. But as clients, as audit firm D, that's that, oh, let me quote so that this thing will come to me. Not that you do the job for them for 2 million. Obviously, the client does not want to waste money. He'll give it to you. That is lowballing. That is an example of lowballing. So what that one means is that if you do such, you can use, that's a way to penetrate, to enter into your client business, as in to enter, to start performing, rendering all these services to your client. So in the process, you now say that, okay, now that I've reduced my fee for this audit engagement, let me also take up some non-audit services from you. For instance, let me also help you with your what's it called? Let me also help you with your task computation. Let me help you to recruit staff. Let me help you to handle your internal audit function. You now from there, all those ones that you have lost in the audit engagement, you now start to gain it from that place. So one of the advantages of, and looking at that question, one of the advantages of a fair provision of non-audit services is that you can use it to what? To augment, to complement what you have done. To complement what you have done. So look at it here. All the things that look at it, advantages for providing non-audit services to your client. One, it's already an essential knowledge to the client business and the system. That is one way. So you should, another one is that you should therefore be able to provide additional knowledge service to your client at a lower cost than other accounting services with less disruption and to the client. What they are saying here is that at lower cost, you can see you have reduced your audit fee. So that what you are doing, you can use it to augment what you have lost as in form of funds or fee when you render the auditing services to them. Now, what are the disadvantages of providing non-audit services? Now, look at it. One, there will be a case. They say the auditing firm may be seen by the world at large to lack independence from the client because the large fee is received for audit and non-audit work. Audit and non-audit work. Remember the self-interest trade that we look at. All the money that you get from transaction services, money you get from rendering internal control services, human resource management, all this money come together. People, the public will not see you as independent. They tell you that no, you cannot be independent because though you appear to your mind you might be independent, but in appearance you are not seen as what? Independent. So that is one thing that will happen. Then the next one is that accountants from the accounting firm may find themselves in a position where they are making management decisions. Now, what this one means is that provided you are taking up, provided you want to engage in non-audit services, provided you are able to spell out your terms and conditions. For instance, if you are to take up this position, if you are to render this non-audit service, these are the things you need to lay down to them. One, you will not be involved in taking decisions with management. That is one. Two, you also need to tell them that at every point in time, you are there on a temporary basis. You are not there permanently. So you are just there on a temporary basis. So they know. Then you also need to tell them that the bulk of that decision rests with the management. You are just giving them like a second opinion. The decision they are going to take lies with them. Then thirdly, if you have accepted to carry out the non-audit services, you should be able to deploy what is known as what? A Chinese war technique. A Chinese war technique. What is a Chinese war technique? What it means is that when you divide your team into different groups, and each of those groups are independent of the other, meaning that when you have a client now and you are the one that is responsible for the auditing services, you are not responsible for the taxation services or computation. Now, what it means is that the team that you have in the audit team should be different and separated from the team that will be carrying out the integration services. They shouldn't mix. Why? Because if there is that clear demarcation, that means both teams are independent. But when you are interwoven or when you are interchanging the team members, definitely the independence will be what? It will be eroded, because it's the same thing that prepared the audit that will now prepare the task computation. So there will be no independence. But if you can successfully deploy a Chinese wall technique, then it will be a safe way to handle such. But if I want to conclude by this, if I want to conclude in answering this question, I will say that when you're answering this kind of question in an examination, you need to give your examiner the two sides, the yes and the no side. So, which is what they have looked at, the advantages and the disadvantages. So you now conclude and say that if they still want to go ahead and take up the non-audit services, then these are the things they need to lay down. First of all, they need to employ Chinese wall technique. So they need to state it clear to the client management that under or no circumstance will they be involved in taking decisions for the client. Then thirdly, the overall decision making rests with the management. So they have to state those things. Once they have stated those things clearly and the client have signed up on this, then you can go ahead and take up the perform the non-audit services. I hope I've been able to answer the question correctly. If you have any question, any area of doubt, please feel free to pop your question to the chat box, or if you are not able to do that, maybe during the week, or whether when you are doing your revision, I'm always available to respond to your queries, questions, comments as regards this topic that we are discussing. And the last part of that question is talking about evaluate for your audience the argument in favor of or against mandatory audit firm rotation. Mandatory audit firm rotation. Now, this question looks at audit firm rotation. Now, remember that this question also relates to independence, which is what we are looking at, and also relates to Chapter 15, current issues in auditing, under audit firm rotation. Audit firm rotation is there. So we are looking. So what is looking at is that what we want to look at here. Let's look at it in line with independence. Now, when you have audit firm rotation, let me just explain that before we go to the suggested solution. When you have audit firm rotation, what it means is that at every point in time, you should not be the one auditing your client for in perpetuity. Yes, we need to answer and say, no, client will attend your operations. And we are right in a situation whereby you have a client and the engagement partner that has been on that client has been, let's say, engagement partner A. He has been the one auditing client A. So you see, or you agree with me that if that same client, that